Good evening. Ira Epstein with your financial market wrap-up. And this wrap-up is for Tuesday, the 8th of February, 2022. And we're right now getting on to 7 p.m. Central Time. So, another update in the stock market. When I got to thinking about this, at first I was looking for the market to come back. And I was. And I had thought, I think for my subscribers, I pinpointed where the market decline had ended. Said we're probably going back up to these key averages, which we've done, but the market keeps going up. Is it getting ahead of itself, or is there something else going on here? Could be something else. First of all, suddenly the people that are buying these dips, and you haven't had one in a while, you'll see that on the chart, they've been rewarded. That wasn't the case. Early on, remember when the Fed was talking they're going to raise interest rates and we moved from the vehicle, we're going to get our first rate cut. Well, first became 6 or 7, right? Read the paper. That's what everybody's saying. We're going to get 6 or 7. Well, 6 or 7, I don't care who you are, it slows the economy down. They can talk all they want. They want to control inflation. Okay, I buy that. But in the process, you take interest rates up 2 percentage points, whatever it's going to be. If you get up to 8 of them, that's 2 full points. You don't think that has an impact? I think it has an impact. In a relative basis, you'll say, well, relatively speaking, it's still low. The economy's bigger, so on. I get it. But we have to trade through phases, and that's what you do. Speaking of that phase, on Thursday, we're going to have our live webinar. Now, if you didn't get the invite from me by email, you're not getting it. I sent it out twice, and that means you're not on my list. There's a solution. Take your cursor, just move it up here. As you do so, you'll see a white box and icon. Click on it. I believe it's white. And fill out the form. You'll get from us then on the email, all automatic. You'll get your user ID and password, the time, the login, and away you go. If you have questions for me, ask them. By the way, I do appreciate the people that have given me ideas on the next vehicles they want me to cover in my Spider ETF, and I'll use the other ones that you've given me and create some charts of them. So I will give everybody a reward that does that. Got it? That helps me. For the futures markets, there's only 40 of them. I can whip them off like that, but I don't know 20,000 different stock symbols, and how do I call it? Does that make sense? Just think of the difference. Okay. So in the S&P, we've had this big break. And the bigger scale, this is just a bounce in a market that broke hard. It could get as high as 45.98, let's call it, the 18-week moving average of closes, before it runs into resistance. That's not far away. It's 70 points now. That would make total sense to me. I can see that just like that occurring. When I look at the March S&P on the daily chart, you went from this high of 4,800 down to near 4,200. If you subtract the difference there, you got, 48 to 42, you got 600 points. Add back 300, half of that, to this low, and you get up to about where you're at. Pretty simple to do. It's a trick I've been doing for years. It serves me well. Other people will do 2/3, 1/3. They'll play the Fibonacci, but you can do it in your head. You don't have to have the chart symbol to do it. You got about a 50% correction. Okay. The trend is up because you've had the pattern of higher lows and higher highs. And today, what the market did is it stepped back because we had gone into a bit of a stall. Didn't know if this market was going to end up with lower highs and higher lows. And what it did is it came out, gave you an outside day to the upside, and you're following through. So now until you take out the low of today, Tuesday, and that low was 44.5625, you're still on that quest trying to get where? Right into these averages, and that's what you're fighting. You're fighting the combination right now of the 18 to the 100-day average. If you break under today's low Tuesday, then you put into play the 200-day average in the gray line. But you're caught in those 3 numbers right through there, and this was not as a chartist a hard call to see what it was going to do. What it's going to do from here gets to be where the interest comes in. Bollinger Bands for the moment aren't in play. Why? They're too far away. To get up to 46, 48, you can do it, but you need a 120-point rally in the S&P, and to get down to 4,300, you need to get a 220-point break. So I call them not in play. They're nice to see, but what's moving the market and going to work with are the moving averages and momentum. Now, very quietly, momentum is getting overbought. It's not even trying to embed. Remember what embedding is. Embedding's when the blue and the red lines are going sideways over 80 for several days, and then I teach in my enhanced Bollinger Band course what to do with that. At the end of this, we'll talk about it. Okay, so I'm bullish. Don't want to see the market under today's low. Next stopping spot, if it wants to move up, 45.60, and I look for some stiff resistance right there. In the Nasdaq, you came out of the downtrend, you came back to the 200-day and the 18, and you stopped. And the market has been whipping. You wouldn't think that, but that's what it's really done. The trend is up. You have higher lows, higher highs, but it's had a son of a gun time trying to stay over that 18-day average. If it extends, the next resistance is back to the 200-day. And you got to ask yourself, if you bought the market at 14,698, the 18-day average, let's say, do you really want to have a stop at 14,467? That's 230 points. For this guy, I know I'm a youngster out there, that's way too much risk for me on a futures contract. So that's what I'm seeing. I'm seeing that I understand the trends, but because of what happened with this break, we're still at the point where the markets have to adjust, and the risks involved in the trend isn't working. Now, there's something else that happened. Read a story, in fact, I read a study today that I never understood, never heard of it, and I'm going to talk about it either in tonight's newsletter or tomorrow. I haven't decided which one. And it has to do when the VIX gets one of those big spikes up and then sets back, and what happens within 6 months of that. I didn't realize this market gained 6 to 9% year after year after year that occurrence happens. How many of those occurrences have happened? I'm going to write about it. I was reading this study and going, you're kidding me. The only time it didn't work recently is 2008 when we had the crash, remember, the financial panic. Barring that, year after year, and many during the year, you've had these instances. So that could be also something that's at work here, that has triggered some buying. I'll stay with my thought, but I like when I see studies like that, and believe me, I'm going to dive into it, and I'll be writing about it. It'll be in my full research. You can't get it unless you're a paid subscriber of mine, which is simple to do. All right, go to the website. When you look at this right through here, resistance if it wants to rally, 35,895. Okay, so that's still 500 points away. That's a major move, right? That's not a little bitty move. That's major. I'm inclined to think you're going to chop around, but you have to have a bullish bias until you take out that break low of 14,668. The Russell, for the first time, can you believe this, since here, January, I think it was January 7th. I was looking at the dates earlier. It's right in that range. It's back over the 18-day average of closes. Wow. Is that a good signal? Well, it is, but it's already overbought. So while I'd like to think it's going to get up from there into the Bollinger Band, I'm a little nervous that it's already overbought, and getting this done has wasted a lot of power. If you're watching the Olympics, I love speed skating. And I was watching the 1,500 ones today, and I'm watching as they're going around. It's only 3 3/4 laps. You burn that power. Well, you're burning power as you're coming up to do this right now. That doesn't mean you can't accelerate by embedding, but you're showing no sign of it. In the VIX cash, what I was talking about are these moves. When you get these moves, often the market comes back and then goes on and rewards the traders. Again, I'm going to write about all that. I want to understand it better before I write about it. That's why it might be tomorrow. In the 30-year bonds, lower highs, lower lows. You can see how the market's just setting in here. Still bearish. This market has married itself. Gorilla glue trade, I'd love to have that name with it. It's just married itself to that. It's not embedded. It's just working its way lower. I do think the pros got out right where I'm pointing, the first break, and the rest of it's gravy. Great. Same thing in the 10-year note. You're not embedded. I think the first break, so the past 2.5 days, the market, that's the gravy trade. In the dollar index, look at the 100-day average. That's the one that's in play with the 18. This is pretty far away. So and it's under the Bollinger Band. So these are the two that you got to look at, and you're just back and forth right here. That vertical break, and that's what it was, where you went down over 200 points, took the air out of the market for the time being. This chart needs to restructure. The flip-flop is true of the eurocurrency. You're overbought. You've hit the 100-day average. You know what I teach. First time you hit major averages, traders typically step away. And it's close to the combination of that and the Bollinger Band. That does not mean they're bearish. It means the market has to consolidate it. It's used a lot of power. In the British pound, the market is trying to pick itself up and be good. Should it get under 134.87, the chart turns bearish. If it can accelerate out of here and start lifting up, wherever the upper Bollinger Band is, 136.84, very much in play. And as you can see, momentum is up. You've got the trend up, the bias up, the chart's still in the bullish mode. Bitcoin, I think that the people that don't understand Bollinger Bands should learn it, because I think that when you hit that today, I think the smart money went bye-bye. It was a pleasure being with you. It owed from when it lost the embedded reading, the 18-day, that's the gravy trade in 48 hours. And there is a correlation, and you know it, between Bitcoin, they've been saying that, and what the stock market's doing. The last time I looked at the correlation, it was 0.66, so that's pretty darn good. Now, Brent versus WTI, it looks to me like maybe this 264, that close was it. You hopped right back over that 18-day average. So I'd be studying that very carefully. Brent is open, but I'm concerned. What do you see right there? Tick-tock, tick-tock. What do you see? Come on, it's classroom. You lost the embedded reading. Now, the close was under 79. So what does Ira tell his clients? I don't care what it does. It's time to be sidelined. If it re-embeds, we'll take a look at it. It didn't re-embed right away. I'd rather watch it. It's that simple. What about this one? Same thing. So today, as far as I'm concerned, was the day in all those energies, money cashed in, trade off, let somebody else own it, which makes a lot of sense right here. Don't really know what's going on either with the U.S. and Iran. Everything, if you read in the paper, it certainly sounds like the Biden administration is somehow trying to make a deal, backdoor it, legit, to get Iran to drop its nuclear and get the 1 million barrels of oil, because Joe needs something. Joe needs to say, I'm fighting your inflation. Of course, we're going to trust those people, the Iranians, at their word that they won't do anything. How's that work so far? But I guess the world goes on, and at some point, you got to say they have what they have. Can you stop them from going further? What do you do? I don't have the right answer, and this is not a show about politics. It's a show about, if you get that other 1 million barrels a day, that certainly does something to the energy equation. That is my point. Now, we talked about embedded readings. Take a look at this. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all 3 of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, If you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.